What is he
Aren't you
doing?
young?
Who?
You.
Who?
Am I
Me?
young?
Yeah. That's the
I
question.
think Dave's old. Dave's the oldest out of all of us.
No, am I? Am I the old man of the group? Fuck. I'm
I think
30.
John-
I'm
is he the-
36. I'm 85. So I
Okay,
don't know
I'm older
how.
than you. I'm
Okay.
83.
No, John Gunn's the old guy.
John Guns. Okay, you're the senior member. We have to respect you. When we drink with you, we can't look at you in the face, so we have to turn away.
What, are you Korean?
No, but I have some Korean business partners, and so
Oh, that's true. Yeah.
Junggan, where's your wife from? She's Malaysian, right? But like, what part of Malaysia is she from?
um,
Okay.
but she was born in what?
How long? How did you guys meet? Like, was she in Singapore when you met her, or what's the
Zook
story?
out on the beach.
Fair enough.
Yeah, fair story.
Yeah.
That was a while ago. Apparently, I was so drunk that night.
Well, apparently it worked out for you, so it couldn't have been that bad. Oh, look at this! Look at this guy,
What's happening?
dude. It took you long enough. Where have you been? We're in the same
dude.
office, and it's like, come on.
Clearly, my Indian genes with IT support haven't been working very well, man.
Well,
I can't seem to try to turn it off and turn it on again. You know.
There's a bit of echo where you are, Andrew.
Oh, you put the mic closer to
I
your
think
mouth.
it'd be mic closer to your mouth.
Oh, yeah.
Check.
Yeah.
There you go. Yeah.
No, come on, show us. No, fail.
Why do we always
Fail.
start the podcast with something sexual, guys? You
3 out of 10. 3 out of 10, Andrew.
Always.
Okay.
No, you should have.
You ready?
Yeah, let's go.
You're the conductor of the show, man.
All right. Hello, barbarians, and welcome to the second episode of the LLB podcast, Low Level Barbarians. From Asia on Asia, with debate and discussion on trending topics with our usual host, the man of the high ground, Dave Chang, Jangan, the information man and super connector, Andrew G, the master debater, and me, Alex, typically the host of EOA. All right, guys, let's get to it. First topic. I guess it's kind of like a follow-on. I hope there's not enough like Grab fatigue, but let's talk about the Grab IPO prospectus. Jangan, you wrote the article on it. Why don't you give us your take on what the results showed and what you think?
So what I did on Tuesday was spending the whole day looking at their Q1 results, their F4, which they filed to the SEC on Monday night. I mean Monday night our time. There's lots of information in it, especially in the F4. And of course, I mean, when they announced this SPAC merger a few months ago, and people were saying that, okay, what exactly is going to happen, and is that 40 billion valuation overvalued, etc., etc. So, lots of information, especially on how they recognize the revenue. So that's a part which got most of the confusion, right? I mean, so different companies recognize different revenues differently. So for Grab's case, I suppose that they had a discussion with the SEC, and SEC said that the previous way of recognizing revenue would not hold because they are charging the users a platform fee. I think 20 cents in Singapore. I'm not sure about what's the rate in other countries. So as a result of that, their customers become more than just the drivers and the merchants. I mean, they're paying customers, the ones who pay them. So consumers become their paying customers. And as a result of consumers become paying customers, consumer incentives can't be part of the revenue. It has to be deducted. So you have this very interesting Q1 2020 revenue figure of 1 million because most of the business segments were negative. How I look at the whole performance, and I think right heading they're doing okay. They're making a profit. But that's due to their market position, right? That they're leading in most countries. Indonesia, I think market share more or less equal, and Gojek didn't have much money to run the incentives last year. Deliveries, they have quite a bit of growth, and they have been focusing a lot on Mart, which is beyond food delivery. So of course some numbers are about growth, but I don't know what was the baseline. They didn't disclose the breakup of food versus non-food. But but I believe that this is the market, as the COVID situation continues. This is something that they will continue to see growth, at least for the next few quarters. Financial services is an area which is a bit of a mess. So it is the area which makes most of the losses, and it's the area where I think their market share is the smallest. Um, so I think we'll probably continue to be competitive for a while. And they didn't really disclose how much revenue they are making from lending services. I think Shopee didn't disclose that either. But 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 I'm not sure. I mean, how this is going to evolve. They probably need to invest a little bit more on that. There's a theory though, which I find interesting, because since every transaction is a GrabPay transaction, so they can hide all the customer incentives in GrabPay, and make the other segments look better. But I've not dug deep enough to understand exactly whether that's the case. On the F4 prospectus, um, the most interesting part and the most readable part is actually the risk disclosure. I think whoever who did that did a really, really good job in making every possible risk disclosed. And it's like reading a story, right? You have the full story about O4, what might happen to O4 in Indonesia. You have the whole story about, I mean, basically you have like, I don't know, a few dozen pages of stories, and that should give you a good understanding about, I mean, the dynamics they're facing in different markets. So overall, I think they're probably going to make it for end of 2021 IPO. So the review of the F4 will take about 2 months if nothing comes up, and then they need to give the 21-day notice to the shareholders of the SPAC. So to call for a proxy vote. So if everything goes well, that's November we're talking about. And I know so many investors in this region are looking forward to that because they'll be holding Grab stocks for a long time. Yeah, that's basically a summary.
Okay. Dave, I don't know. Do you want to pull up the parts of the deck, or what do you want to do?
Sure. I mean, I can share my screen. So just give me 1 second.
Well, while Dave's doing that, Jangan, so this whole getting consumers to pay, is this an extension of the subscription service that they piloted in a couple of markets, or
No, it's
how are they
actually
positioning this?
so basically it's actually applied on ride hailing. So in Singapore, is what they call a platform fee. Consumer pays 20 cents for each ride, and this money goes to Grab. This money doesn't need to be split with the drivers. So you can do the calculation. This money is basically pure profit for them.
Is anyone doing this globally in the ride sharing space? Like, is Didi doing this? Is Uber doing this anywhere?
I'm not sure. I spent enough.
Because that's a
I spent enough time trying to understand how did he recognize this revenue, and
Got it.
but if we go by the logic that SEC asked them to do that because of this fee paid by consumers, and we did look at a few companies, it seems that only DoorDash uses the same way of recognizing revenue as Grab. Other companies using different things, and maybe we should make a chart at some point in time so it's easier. Because
Well, so what's the SEC logic here? Sorry, just trying to understand this.
the logic is that the consumers are paying customers. So consumer incentives should be contra revenue rather than sales and marketing expenses.
Got it. Got it. Got it. Interesting. I mean, in some ways, a 20-cent charge is almost like a payment transaction fee. And considering they also own the infra for payments, it's almost what Visa, MasterCard charges, except monetized on an absolute value as opposed to a percentage, right? I don't know if that's a way to look at it.
Probably, but I'm not sure. I mean, how they factor the sort of incentives for consumers to use payment services. So that part is not clear to me.
So, I mean, speaking from experience in e-commerce, typically when it was retail, when we bought and sold the stock, we would factor it against, revenues. But if it was a marketplace trade where the transaction costs was borne by the customer, and we were just having a commission or some kind of take rate, then it would be considered sales and marketing as opposed to being removed off the revenue. So it depends on whether it's third party or first party. And in this case, if they don't own the vehicles and the vehicles are being owned by contractors, independent contractors, then I guess the logic of considering it sales and marketing actually holds true. But then I'm not an expert on SEC laws, so I don't know what the specific requirements are.
And the funny thing is that because of this, I think they have to recognize the same thing for other segments. What I find particularly interesting is that they have this piece called enterprise revenue, where they sell their ads, where they sell their fraud control services, and they license their
Grab defense.
Yeah,
They call it grab defense.
Yeah, they license their map to use. I know the guy who developed this map. I think was initially out of the R&D center in Beijing. What's interesting is that in this segment, they use the same sort of metric, right? GMV, adjusted net sales and revenue. So basically consistent as the sort of numbers from the platform, but this is not a platform. So there you have your slides.
Let's just get into this. Yeah. So I think so. I had a couple points. Full transparency, I didn't go through the F4 from the SEC because I didn't have the time to.
I have 600 pages prospectus of Bukalapak if you're interested.
I'll pass. We can talk about that. We can talk about that.
Yeah,
You got the whole weekend ahead of you, Dave.
Yeah, I also have a social life, but let's
Do you?
Yeah. Let's focus, guys. Focus. Okay. So I did go through their Q1 2021 results that they had released in conjunction with their SEC filings, and just sort of like looking at a cursory glance of this, there are a couple of things that did stick out to me. One, there's like a conversation about using non-GAAP numbers, but I don't think that's as important as sort of the other points I'm about to make. So let's just start from the top line, right? So I think the first thing that really stuck out to me is their GMV growth, right? So if you do a quarter to quarter comparison, right, they went from basically $3.4 billion US dollars in GMV to $3.6 billion US dollars in GMV, which is essentially a 5% difference year over year, which given sort of the way that they're marketing the company and how it's being sold. Of course, let's be clear, 3.4 and $3.6 billion, those are very impressive numbers, right? But a 5% growth rate in the region and in the businesses that they're operating in, to me, is not a very impressive number. And then we can get into the details of that in and of itself, right? And so if you then look at their adjusted net sales, right? So their adjusted net sales grew about 39% from 367 million to 507 million, and their GMV per monthly transacting user also increased from 117 to 153. But I think if you do a bit of a deep dive into this and look at what's actually driving those numbers, most of that is coming from improvements in their delivery segment, right? So when we say delivery, I'm mostly referring to food delivery. In terms of their Grab Mart numbers, they've shown 36x growth, but they don't actually give you any reference points. So it's impossible to say how substantiated that growth is, right? It could be, $360 million, or it could be $360. There's no way for us to tell, right? But if we're looking at these numbers, right? So for me, what it's essentially their Q1 is saying to me is right now their food business is driving the majority of their growth, quarter over quarter. And then so I think the logical question is, okay, so in the context of their competitors, how impressive is their growth? And I'll dive into the delivery segment specifically, right? So deliveries specifically, the GMV grew from 1.1 billion to 1.7 billion. So that's a 49% year over year increase, right? Adjusted net sales from 149 million to 293. So 96% increase year over year. So they're getting higher take rate. And then what I did essentially is I took a look at their closest proxy in the region, which is Foodpanda. So Foodpanda, as you all know, is part of Delivery Hero, which is a publicly traded state company, and Delivery Hero has released their Q1 results as well. And inside is the Asia region. So the definition of Asia is a little bit different vis-a-vis Grab, because there's a couple countries that's counted in Delivery Heroes or Foodpanda's Asia region that are not included. But just to give you a sense of what a comparable company or business is doing, as a bellwether indicator, right? So Delivery Heroes Asia GMV increased from 2.8 billion to 5.1 billion. So that's essentially like 100%. I mean, a little fuzzy on the math, right? But essentially 100% increase, right? And the revenue increased from 291 million to 630 million, right? So to me, while these growth numbers are impressive, they're still, being outcompeted by the peers in the market, right? And then in terms of sort of like the other numbers that are inside here, right? You have the other segments. Mobility has decreased in terms of GMV, which again is not surprising because of COVID. Conversely speaking, their segment adjusted EBITDA has increased for mobility. But again, as we all know, this is very incentive driven and no one's really giving out incentives at the moment, which is also true for food, I would say, right? So, looking... Okay, fair enough. Yeah. I don't know about Foodpanda, but like I get no promos here. Anyway, my point is
you're just already a high LTV customer.
Yeah. That's true. They're like, this guy doesn't need any more incentives. That's probably right. Yeah. And if you look at their financial payments sector as well, right? That sector growth, right? So their financial services, their total growth in terms of total payments volume only went from 2.3 billion to 2.7. So it's 18% growth year over year. Again, this is not, to me, something that says, rocket ship hyper growth, right? Especially if we compare it to some of the other businesses in the region, which we'll talk about later on the show. So right now, what my assessment of this is all the growth is predominantly food driven. Most of the improvements in profitability is coming from lack of competition, but as soon as incentives start to scale back up again, which they inevitably will, once this, health situation is over, I expect to see some pretty marked declines in their segment EBITDA. I guess the flip side, I mean, the really positive side is they're very well cashed at this point, right? They have like $5 billion in cash, and that's before the SPAC proceeds. So by the time
10 after this,
basically $10 billion. So they have more than enough cash runway to spend some time figuring things out. But again, looking at these numbers from their Q1, it doesn't change my assessment from the previous episode, which was essentially, I mean, the business itself may or may not make sense, but at the price that they're asking for, it doesn't make sense to me.
Actually, I mean, I didn't go through the Delivery Hero numbers. They're listing in Frankfurt, right?
I believe so. Yeah. I'll send you the link later. Yeah, you can look at it.
Cool. So one thing I'm not sure if you pick it up is that, of course, I mean, their business in Asia would include business in Hong Kong, Taiwan, I think Japan and Korea.
Yes. Yeah.
Yep. And we did assessment in January about delivery numbers in Southeast Asia last year, and one thing which surprised us was I think our estimate was Singapore's total GMV for food delivery was about 60 to 65% of Indonesia. I mean, you compare, I mean, how big Indonesia is versus how big Singapore is. Oh. So we attribute that to a number of reasons. I mean, firstly is that I mean, average basket size here is much higher, and the second is that I mean, Singapore enforced 2.5 months of lockdown pretty strictly. Yep. And even after that, there were periods where people just don't go out and eat. So basically that drove the demand up. So I suspect that that the GMV they can potentially get from Korea, from Japan, from Hong Kong would be actually fairly significant. Mm-hmm. I do believe that places like Indonesia and Vietnam, where you can have impressive growth, but it's still a relative long-term game. The other thing I'm not exactly sure about is that so Q1 they probably haven't completed the purchase of Ua Brothers in Korea, the number one player. So I'm not sure how that was factored. I mean, if Ua is included in Delivery Hero Asia numbers, then the number would be looking very impressive.
Sorry, when that purchase was in Q1 of 2020 or 2021? Just for my...
I think it was announced a while ago, but took a long time for the Korean regulators to approve that. Remember, they had to divest another player that they owned, so that they don't have too much market share.
Right.
Okay.
Okay.
So it's like all these factors you have to consider before you can compare apple to apple, which is kind of annoying.
Yeah, true.
And there's not a clear split of like ride hailing versus food in the deck, right? Or is there one in the F4, Jungen?
In terms of GMV, you can see that in the Q1 results.
Yeah, GMV is broken out by segment, or by.
Got it.
Yep.
I mean, I guess my overall take of the Grab IPO is that they're really trying hard to paint, profitability picture, and it's like there's a lot of obfuscation. I think like it's a lot of financial jiggering around, and it's not clear what the metric means. Like my biggest contentious point is like the profitability metrics, like segmented adjusted EBITDA, right? It doesn't include regional costs. That could just be a big black hole for all you know, right? So like, what does that actually mean? Like what do you need to fire everyone? But then how does your machine work? So, I think like it's just very hard to understand real profitability. So I mean, of course, like I think Dave told me, like you just got to dig into the F4, right? Which if you want to do the hard work and really figure out the story, it's going to take a lot of time. But it's clear though the deck is trying to paint a certain narrative to kind of fit leading into the SPAC. So I don't know. I think it's very questionable. And if you really look at the profit margins, right, it's only 6% of GMV. It's like $260 million, right? So I think that stands to Dave's point. At this current time, valuation is just way overvalued given to what they're generating. And the 6%, like that's your margin. It's very flimsy. Like my point still stands from the last episode as well. Like, it's very hard to defend that. And, like Dave brings up a great point about food. And, anyone with a war chest coming in, there's very hard to be defensible, I guess, in terms of switching costs at this point in time for four verticals. Yeah.
I'm gonna break this down and start blowing the Grab trumpet here, guys.
Someone has to.
Someone has to. I think I need to I need to start wearing a green shirt. You do. Just at this rate of cheering Anthony down on. But okay, let's look at this, right? So they've lost 500. So GMV drop year on year is about 500 million, right? If you look at the just the slide decks, right? Deliveries up the exact same amount. So basically, the losses in mobility was replaced by deliveries. And what's very clear is like your take rate on deliveries is going to be a lot better. And that's an absolute improvement in profitability. So net, even though GMV's like been replaced by one category into another, it went into a profitable category. And now, arguably, if deliveries is about habit building and getting people to start buying these things, and it's likely that in a region where car ownership is pretty high, motorcycle ownership is pretty high, but there's a bit of space to grow in terms of deliveries, they're probably the growth is probably going to skyrocket in deliveries, and because take rate and profitability is higher, you're basically moving from a less profitable business into a more profitable business. So that's good. And that's not even counting financial services now. If I look at financial services, it's gone up, 500 million as well, right? And financial services is literally a year or two before when things were going to blow up. We're literally seeing, if you remember Shopee in 2017, right? It was nowhere to be spoken of, but then like it just completely skyrocketed, right? And it was because a lot of elements came into play. Grab in the next 6 to 12 months is getting their digital banking licenses in multiple markets, right? With the banking licenses, they're going to have capital. Net interest margins are going to go up because cost of capital becomes much lower. The amount of products they can push. And Southeast Asia, we don't even know what's going to happen. Like, is it insurtech? Is it fractionalized gold shares? Is it crypto? Like, there's a team in Grab working on crypto at the moment, right? They haven't really launched anything, so who knows what they're doing. But there's a space to play in terms of crypto exchanges. The governments in each market is just starting to figure this out. So if Grab plays this financial services act right, this is like, we're literally seeing the start of the J curve, right? So if you break it down driver tree wise, mobility, sure, GMV went down last year, expected, but it's going to be replaced next year, and arguably they can improve profitability there. Deliveries, it's going to skyrocket, profitability is going to increase there, and then financial services is just like, we're literally at the beginning. It's a Series A for GFG, right? So I don't know, as an investor, I'm saying like you literally get to be in the beginning stages of something that's going to blow up. Sure, the numbers don't look good right now, but you're comparing them against who? And to the point of competition, for sure. I mean, like, if you're a smart investor, get some stock in SEA as well, right? Because at the end of the day, they're launching Shopee food across all markets. They're going to be as aggressive as they did with e-commerce, which means it's a win-win for merchants and consumers.
That's going to squeeze margins in a region
Yeah.
for food, man.
Let me just interject one point to your point, Andrew, about the growth rates. I don't actually think food growth rates or delivery growth rates are sustainable mid to long term. If you think about it, right? Like we've all been locked up. People in the region, more or less, have all been locked up for the last, depending on which country you're in, which market, anywhere between like 4 to 8 months, right, give or take. So obviously, what you're doing is you have this exogenous factor of our public health situation, which forces adoption of this service, right? So yes, it did grow, and this is true for the entire industry, right? I'm not picking on Grab in particular, but so even in the Food Panda's case, where they grew 100% year over year, I don't think that's a sustainable growth at all. Once we go back to some level of normality, people can go eat again, people can go to the grocery store themselves, whatever, right? I expect those growth rates to come down significantly, right? So I think us projecting out their delivery growth based off the last year is not tenable long term, right?
I have the same problem with rideshare as well. Like they're like in 3-4 years, it's going to grow from the current rates of like 3-4 billion GMV to up to 8 billion. How big do you think the transportation market is? And my point to that is because what's going to be their cash cow? I mean, okay, granted, I think Dave's point about runway is really good. So if Andrew's story is true, they have enough assuming they go uncontested, right? Which I'm not really sure. But they could back into it in the next 10 years with $10 billion, right? Even they burned $1 billion a year, right? So, your story might have legs, Andrew, but there's a lot of problems to it still, I think. And I think, there's a lot of people who are hungry who are looking at the region now, given all these kind of valuations, and we're going to see even more money come into and more competition. And I mean, I'll give you also another angle that we didn't talk about. I think a huge problem to food and rideshare is the supply side of actual cars and drivers. I think we're at a saturation point. You go to every market, I think you've maxed out. I mean, it's also like relative to the supply and demand balance. Like when you run it, you're always trying to optimize for fulfillment when you kind of run rideshare or food and capacity utilization. But like you're at the point where you have to grow the supply base to even match this monstrous growth that they're projecting, right? So I don't know. And right now, Malaysia and probably other markets too, you're constrained. Like these drivers are on every single platform. So in terms of incentives, you have to go even crazier if you want to grow supply more, right? To match this growth.
Yeah. So two retorts to that. One is like, look at China. They still are able to grow like delivery services.
Way bigger market, right?
I don't
600 million, 1.2 billion, right? Yeah. Sorry, Jangan.
I don't see the supply of drivers being a problem. I mean, with the exception of Singapore, I don't see that as a problem. And to the contrary, I mean, when you have had that growth over the last year and a half, then the density of the orders, I mean, I presume has increased quite a bit. So which means that the same amount of riders, they're getting more jobs. What I would be worried about in Southeast Asia is actually, I mean, sorry, maybe politically incorrect, is that there's not enough formal jobs being provided to people, which as a result created that so many people having to take this kind of freelance jobs. So I'm not worried about supply of riders at all. And in fact, I mean, the denser it becomes, I mean, the more that each rider would make, and that keeps the system going. If I look at Meituan, this is how they managed to create this wheel, right? I mean, there's this big hoo-ha about there's this big hoo-ha in China about forcing Meituan to pay for the social security of riders. And I actually asked a number of friends, I mean, including friends at Meituan, about the cost structure of not cost structure, but earnings of the food delivery riders versus people who would be working at warehouses, working in factories. And in multiple cities, I mean, if you work as a food delivery rider, on average, you earn 30 to 40% more than if you are working in a factory, same working hours. And of course, you have much better working environment. You are outside and you have fresh air. I mean, you get exercise. You're not stuck with the machine. And so basically, it's a much better life, to be honest.
Amazon warehouse workers also get exercise.
This sounds like a propaganda recruitment pitch deck. You will get exercise while you earn minimum wage.
No, but exactly. So I don't know if I mean, okay, I'll respond to this. Like, I'm not sure I fully agree, because I don't know if you remember our days, man. Like when I was waking up at 4 a.m. in the morning to go find drivers. Dude, that was hard already. And you're telling me like it's
Because
like,
you were not paying them.
that appealing.
Because it because you didn't have orders. You didn't have orders to give them, and they didn't have enough earnings.
Yeah.
And to compensate for that, you have to pay them incentives.
Yeah.
Okay, okay, there you go. Yeah. I don't know. I think we're already at the peak of the size of the market, and then it's up to macro
don't
factors.
think we're at the peak. The question is whether or not the bottom line for these companies. Actually, very interesting topic here that we're sort of touching on, which is how much of the effects of COVID in terms of the positive upside to these digital companies is going to last, right? Meaning both on the top line and the bottom line. So, for example, if you speak to anyone in C Group or Grab, they'll say, we foresaw this kind of growth happening just maybe 3 years down the growth. We just didn't expect it to happen now, right? Now, then the question is and so as a marketer, I believe that when people build habits, those habits can stay. So maybe I have rose tinted glasses, and I believe that if people are used to ordering food as frequently as they do right now, some of those may stay, and we almost bought ourselves 3 years or 4 years into the future in some of these habits, right? But on the flip side, funny story, last year we had an AirAsia pilot in a car delivering one of our food delivery packages, right? And it's unfortunate that this market has gotten to such that people that had high paying full-time jobs are now working in these service industries. But the problem is, will that exist when AirAsia is everyone can fly again in 6 months from now, then suddenly this whole group of delivery riders have just disappeared off the market, and suddenly your incentives are going to go up, right? So arguably, I think what we're it'll probably net. But
I think you've hit on you've said it in what I was trying to say in a much better way. Exactly, is how much externality is built into the business right now, right? And my view of this is actually this is probably the best thing that could have happened for a lot of these companies, right? Because if you think about it, you've turbo boosted demand and you've turbo boosted supply. Right. So all that money you've spent acquiring customers and incentivizing your drivers, you don't have to spend it, because you're right. Everyone's locked up and no one has jobs, or a lot of people don't have jobs, right? And so it's as a marketer, we all know this, right? Obviously, you can't project your CAC costs out beyond a certain point, because the next incremental customer is going to be that much harder to acquire, right? And that my thesis of this is as soon as this is over, whenever that is, and we hopefully sooner than later, right? These numbers are going to kind of go out the window, and we're going to be in a whole new landscape where it's going to be much less rosy looking.
But I do agree.
Sorry, Alex, go ahead. No, Alex.
I was just going to say, I kind of agree with the marginal acquisition cost. That's my whole point. Is getting new drivers beyond what we're seeing now, it's diminishing. We saw this early days doing rideshare. It was just very expensive. Granted, we weren't in a price world. There's a monopoly now.
You can't compare.
That's true.
So man, I'm just gonna say, Dave, I actually think it's the opposite way. Two things, right? Number one, there's been a massive discount in customer acquisition costs for these companies in the last year, right? Just for pure reason that they just had organic acquisition, because people were at home and they're like, shit, I need to eat, right? Let me just order from this app. People keep talking about Food Panda. Let me just download this app, right? So CPIs probably, I would love to see the numbers. They must have tanked, right? Number one. Number two is, now that you have this install base and you've kept them for, past that threshold of uninstall, whether it's 60 or 90 days, how much are people going to uninstall you, right? This is the first way you win. The second thing is, I actually think CAC decreases. Sure, the marginal cost of acquiring the next customer increases, but as an average, as a mean, your CAC goes down overall. And the reason for that is you have network effects. If 5 of your friends are eating from Grab all the time and you're the only odd one out, it's a couple of days before you go, damn, I got to try this thing, because everybody seems to be talking about how easy it is to buy with this thing. That's how Pinduoduo grew. That's how any viral app grew, right? And I think some of these apps are going to have this viral organic growth from network effects, from word of mouth, etc.
Okay. I'm gonna interject here. I disagree with you strongly about this, right? And I'm thinking about this in the context of Metcalfe's law. So does everyone know what? Okay, just to explain. So Metcalfe's law essentially states that the value of any social network is the square of the number of connections on a social network, It's an approximation, right? So basically, Facebook is more valuable for exactly that reason, because all your friends are on Facebook, right? Or WhatsApp or whatever, anything, right? That doesn't apply in this case, right? I mean, maybe you'll have some marginal effects in terms of acquisition costs from you recommending it to me or me recommending it to whoever my friends are. But just because we're all on the app for a food delivery app, it doesn't, in its current form, it doesn't have any what I would consider compounding networking effects.
I think that we're talking. I think what Andrew mentioned about network effect is he probably meant something else, right? I mean, when I look at, for instance, cross-border commerce, right? Once you have that channel open, once you can get things fulfilled to people within a couple of days versus 2 weeks, and versus, I mean, if you take this back to food delivery, I mean, now, I mean, you have reasonable capability in the market to fulfill your food delivery orders in 30-40 minutes versus in the past. I mean, if the orders increase, then you can't fulfill. So that creates a convenience for customers. And that gets more comfortable for people to order. I mean, if you see the case in China, that, I mean, the young people, once they get used to food ordering, I mean, my mom, she's retired. She got back to work for my uncle's hospital as I don't know what she does, but she said there's a canteen and all the young people are ordering food delivery every day. I mean, this is not in a big city; it's in a small city. And they said these guys are just not used to eating at the canteen. Every day order something which is 20 yuan, 30 yuan. She thought it was quite expensive because it's free to eat in the canteen. But for them, it's just, okay, I mean, I'm used to it. I mean, taste is good, and it's convenient, and it's better than canteen. And they just used to it. It's so difficult to get it out of them.
So there's two very interesting pieces here that I just want, like, so first is, I think to Zheng'an's point, exactly, you're right. I'm not talking about network effects from acquisition. What I'm talking about is the fact that early adopters, always difficult, always expensive. Once you convince them, you start to ride the normal distribution of getting your mass market consumers, right? And I think we've always felt like Southeast Asia, oh, you know, when are we going to stop with this acquisition? Are we already at the bulge? Are we not at the bulge yet? And I actually think we're still ahead of the bulge in the sense that we're still acquiring a ton of customers that haven't used this stuff yet, right? And so it's what I mean. It's not like necessarily network effects. It's FOMO-ness and a feeling that if all my friends are doing something, maybe I should also do that as well. Like that's how a lot of these services get adopted after a while. But that being said, I think you have a genius point here. And if anybody from Grab, Shopee, whoever else is listening onto this podcast, what are the network effects that could be baked into these apps? Because right now, they're sitting on a treasure trove, right?
Yeah.
And if you could actually allow community-based interactions to happen within these apps, you could actually strengthen those networks between people. So, for example, I don't understand why Grab has not gone neck to neck against Carousel and Facebook Marketplace and launched Marketplace. They've got chat, they've got payments. All they need is a tab that lets people auto upload their own products and then just monetize the shit out of that, right? Marketplace should be something you should launch. You've got P2P logistics already. So if anyone from Grab is listening to this, launch Marketplace, god damn it. Like, I don't know what's taking you so long.
Yeah, no, I agree. I agree with you completely. Like some sort of networking, some sort of moat, right? Because right now their moat's quite weak. It's just a capital moat. But if they can actually monetize all of their use, or if they can leverage all their users into something that's truly like an actual network, then I would actually change my tone substantially on this business, and I'd be super gung-ho about it.
And with 10 billion, with 10 billion in a bank account, I mean, they are in a better position than anybody else to do this.
But it's arguable that maybe they've gotten to this stage, and this is my only caveat about Grab. I think they might have gotten too big to be as innovative as possible, and some companies are able to continue. I don't know what the Shopee people drink when they go to sleep at night, but I want a piece of that because they seem to be innovating like mad, right? But on Grab's side, like honestly, I could name 5 innovations that they would be absolutely like, dude, just Marketplace as a model, C2C, completely uncracked in Southeast Asia, huge market, right? They could be launching a whole bunch of things off their logistics infrastructure that they're done, like group buying, community buying. The whole Pinduoduo equivalent could be launched in Southeast Asia right now. Everyone's experimenting on it, but no one's really launched it yet. Like, why is that not a thing? Instant messaging. I tell you, at Lazada, when we launched Seller Buyer IM, conversion rates skyrocketed because Southeast Asians, we don't trust people at all. We need to talk to them first, make sure they are nice people. And if they say a couple of nice things, we're like, fine, I'll buy from you. I spoke to a taxi driver in Bangkok once, right? She was like, where do you work? I said, I work at Lazada. She's like, okay, I don't buy on Lazada, but I buy on Facebook Marketplace. And I was like, what the hell, yo? Because Facebook Marketplace just launched
There's a
3
huge
months
market
ago.
for
We've been
that.
around for years. And she's like, no, because I get to talk to the person and see their profile picture. And I was like, holy shit, like people in Southeast Asia, they need that hand holding, right? And Grab, goddammit, you've got instant messaging as a feature. You could launch the Line or WhatsApp business in Southeast Asia, right? And monetize that, right? There's at least 8 monetizable lines. And this is also why I'm excited for Grab, because I feel like they've got the pieces, but they can either go the Sony Ericsson route or the Apple route.
Yeah.
And that's hard to say.
That's also
right?
a big question
Do you
mark,
build-
right? I guess Anthony Tan, if you're listening, I'm sorry for everything I said last week. Please call us, and we will increase the value of your business.
But I mean, sorry, go ahead, Jimmy.
And when we talk about marketplace, watch what TikTok is doing. I mean, I think what they have been experimenting is phenomenal. And the only problem, or the only sort of obstacle which might prevent them from doing something effective is their internal priorities. But what they have been doing in Indonesia, I mean, you go to TikTok in Indonesia now, you can check out inside the app.
Yes.
You can't do that with Instagram. You can't do that with Facebook, but you can do that with
You
TikTok.
can with Instagram, but it's not as focused. Like, I think the problem is these big American companies who have already giant monopolies here, but they don't really focus on it. They're just too far away, right? Like
no, it's not because I think they're so afraid of.
Sorry, go ahead.
So go ahead. No, Dave, go.
Just quick one. That's a feature. That's a country feature rollout issue. So Instagram checkout exists in various advanced markets, and like in the U.S., and I think some European markets. So it exists, but they clearly haven't prioritized it for the Asia region. So that's my only point.
Which is crazy.
So my position is actually it's not a prioritization issue. Actually, it's a fear or a risk taking issue. So WhatsApp tried to roll out Pay in Brazil, backed out 12 to 24 months later. They tried to roll out in India, they backed out, and then they decided to launch Libra, now rebranded as Novi, which was like one of the biggest mess ups of the last 2 years, right? Because they were like, let's just take crypto and take over and launch it all over the world, and like fuck Bitcoin, fuck Visa, you know. But the problem with that is sorry. So I think what happened was, and internally, Facebook has become so afraid of, like 3 years ago, they wanted to be the WeChat of non-China. Basically, take the rest of the world, let's be WeChat and build super apps the way they did it. And then they had 3 fintech mess ups, and they were like Indians were like, we want net neutrality. We don't want your stupid payments taking over. And then the Facebook deal happened, and now it's a bit friendly, but is it really? And then Brazil didn't work out. So I think what's amazing is this, right? In all these regions where WhatsApp isn't moving fast enough, actually there's an opportunity, and that's where Line is. Like, why is Line number one in Thailand? Why is in Vietnam? What is it? Zalo is like number one, right? And so there's like this amazing white space here, but who's fast enough to fill that up, right?
Correct.
Agreed.
So a friend of mine, I mean, you can probably guess who that is, who got rich via Facebook. And then he came to the region, and then Facebook is trying to get him back. And he said, he said, there's only one thing which might excite me if I go back to Facebook, and which is mini programs. I mean, if you can build mini programs on Facebook, exactly the way that WeChat did, that would be amazing, because that would be open so many opportunities. But that's something that Facebook started with. And then
they started as a mini
their app marketplace.
So shout out for another company I'm super long on. Zoom launched mini apps last week, guys. If you updated Zoom, there's a new apps page. And some of them, like, what I like about it is they decided to not do it corporately. What they did is, like, you have direct integrations to Asana, Jira, so you can run your coding Zooms. But they also have Werewolf with friends. Right, so you can do like fun stuff with your family. You can do like picto charts and like whiteboardy stuff. And I think Zoom, like if Zoom plays this right, and I hope they do, they will build this like nice interface around video and try to replicate what happened in China with WeChat. Like, add payments. Let me run my yoga instructional studio of Zoom.
Yeah.
The teachable,
I'm glad that you really like this idea and these models, because that's the exact counter argument as to why Grab could be in trouble if one of these guys wake up and start innovating this, right? It's just they have their own network, their own moats. If anyone, like Facebook wakes up, if anyone wakes up, that's what's exactly going to happen. So that's one risk they will have to figure out. Like either they're going to get acquired because they need a cash cow, or they have to figure it out sooner. Like what really drives profitability in a substantial kind of way long term. But guys, let's move on. We've talked like
that's more.
Okay.
You should rename this podcast to Grab and Other Stuff.
Too much grab.
Yeah.
Next week, no Grab.
Forbidden. No more Grab.
Forbidden. We'll do something else like Shopee and Lazada, your favorite topic. But okay, let's move on to, again, sorry, we're doing China Crackdown 2.0. So back in July 22nd, I guess this kind of came on our radar when we were talking in our own group. The Hang Seng Hong Kong Index, right, on the 22nd of July dropped 10%. There was more crackdowns happening. Jankin, what was the background, and what is everyone talking about now?
There's lots of things going on.
Yeah.
There's really lots of things going on, but I think essentially is there are a few social agendas that the government is trying to push, and these days, I mean, many of my friends are reading this book, this 3-volume book written by Xi Jinping back in 2014 called "Governance of China," and many of the things
is there an English
that
version
now. He published official English version, so you can actually get that. But I'm not sure whether you have the
governance of China.
whether you have the patience to plow through the whole thing. But there's a big chapter which he said the burden on kids and their parents is a big social problem which need to be resolved. And if we let it fester the way it is, it's going to be detrimental for the future of our society. That's what he said back in 2014. So of course, I mean, and then afterwards, people sort of found other social problems that he was trying to resolve in the book as well, and which you now see things sort of happening. The way I see it, there needs to be some regulation because capital is profit seeking, and if you don't put some rules, it will. I mean, there will be negative externalities. The challenge is that. The challenge with China was that many of these things happened before the regulators figured out what to do. So there might be some lessons for regulators in Southeast Asia and elsewhere saying that, I mean, now you have the community group buy, now you have buy now, pay later, then you have all these things. So do you do something now, set some boundaries, or do you wait until they become too big? You try to change things that they sort of upsetting everyone, destroying the investor confidence, etc. Another thing which could be interesting. I mean, I'm not sure if you guys followed what happened this week with the gaming market in China. So
how Xi Jinping told them that Tencent's the opium of the youth, basically.
No.
Spiritual
opium. Is that what you're talking about?
Yeah.
Spiritual opium, yes. So basically what happened is that this newspaper affiliated to Xinhua agency published an article, I think on Tuesday, saying that the games are spiritual opium, is destroying our young, whatever. So the investors were already hyper nervous, and when that happened, they said, "Shit! I mean, this is gonna be the next." And they started dumping Tencent stocks. I mean, Tencent dropped what 10-11% over a day, which is
Something like that.
Phenomenal for Tencent and for a company of this size, right? What happened around lunchtime on the same day was this article was taken off. Like disappeared.
I didn't realize that.
Across
So
the
it was
internet.
removed.
It was removed.
Okay,
It was
interesting.
removed. No, that's not the end of the story. And by dinner time,
You mean the internet that Tencent kind of runs?
no,
It was mostly removed of Weixin, right?
everywhere, because it was originally published
Okay.
in a government affiliated website. So by dinner time, it reappears. It reappeared with all the sort of sensitive words removed. And the funny thing is that the next day you see all this debate coming, and by different camps of government affiliated media. Some of them are saying that games is our core cultural competence. I mean, if you look at the Koreans, the Japanese, and they build basically the whole culture industry on top of games. And this is the area that our companies are making the most money outside China. So, And there's also another argument saying that, I mean, look at the young people now. I mean, if you don't give them games, for those who are not determined to study, they will find other ways to entertain themselves, and which might be even worse than games. So,
Yeah.
so the real burden is a social issue that many people have their parents working in the cities, they're left alone in the countryside, and this is the real problem. The problem is not the gaming companies, etc., etc., etc. So I remember a friend telling me this. He said, his interpretation was this is probably a mid-level bureaucrat who sensed the wind blowing against the capital's favor, and he said, okay, now I can do something that my boss would be very happy about. So he wrote this article, but then it turned out that his boss is probably not happy about what he wrote. So then it was taken off, etc., etc. But that actually highlights a bigger problem, is that when you have all this sort of medium, lower level, or even senior level bureaucrats being very zealous about pushing the agenda towards a certain certain area, and the man sitting on the top, would he be able to see the debate? Would he be able to see the reality, or would he just hear one side of the voice, which says that, okay, let's all go left. It's very good. It's very good for us. Everyone's happy. We saw that happening before the Cultural Revolution. So this is something that I think a few informed friends are very concerned about. But it's complex. It's evolving. Now, I mean, it's you never know, right? I mean, you have someone who's absolutely in control now, and he's driving a few good things. But will his idea change? Will his access to information change as things things go by? So it's hard to say.
Yeah,
Voilà.
I think. Sorry, go ahead. I didn't mean to interrupt.
I'm done.
No, I was just trying to understand, Jenga, what do you mean by that? Like, you mean whether or not the decision to do these kinds of things is actually morally correct, and whether that should be like reviewed by a bunch of other people, or what do you mean with that statement?
I mean, so where you have someone whose decision is absolute, right? I mean, everyone has to follow. Then, I mean, how do you make sure that this person is always making the right decisions? How do you make sure that this person has the right information to make those decisions? Because in the beginning it's good, but afterwards, because there's no consent, people are sort of used to saying things that this person likes, and which might collectively roll the whole country towards a certain direction, which might not be good.
Yeah, I think you brought up so many really good points there, and I just want to sort of add on to that. So I think, like, in terms of the regulatory environment, this is actually super interesting, because if you look at what's happening in America, right, this is actually being mirrored to a certain extent in the US. And what I mean by that is, America's been on like sort of like this Chicago school neoclassical approach to regulation for the last like 40 years, which is basically free markets, right? And then their standard for antitrust has been essentially what's good for the consumer, right? And so, by that definition, then a lot of these large tech companies in the US and globally, really, they're good for the consumer. Like, I go on Amazon, I get cheap stuff. It's delivered to my house in like 5 minutes. I go on Netflix, all my content is free. But what it sort of leaves out is the externalities that these companies produce, right? So like Facebook obviously has any of these large tech companies has externalities, right? And I think that's, if you look at sort of the appointment of the new FTC chair in the US, Lina Khan, her approach is actually quite similar to, in some ways, to what the CCP is doing, where she is using a more holistic viewpoint of how these companies are operating to inform her antitrust legislation, right? So actually, I see America. There's some lessons here actually that I think that Americans can take, right? Because that's essentially what the Chinese are saying. Like, if you think about the role of a regulator and what a regulator is supposed to do, I mean, they have a couple different jobs, right? But one is obviously enforcement of the rules, but also it's kind of what kind of environment do we want to create in our society, in our culture? And I think the CCP has been progressively being more upfront about, okay, these are the things that we want to promote, these are the things that we don't want to promote. And I think the US is going to start going in that way. I think the difference here is that obviously in the US, you have the due process, right? So you have to there's rulings and you can fight the rulings. It'll go through the court system up and down.
It gets politicized.
It gets politicized where in China, then it's just kind of like, okay, well, today is what it is. And it's a bit more opaque, right? And actually, I looked into this too as well. So a lot of what's been sort of been rolled out in the last couple of weeks in China. Like, so for example, the Tencent music streaming deal, where basically the government forced Tencent to give up their exclusivity with a bunch of music labels. That law is actually just enforcement of a law that's been on the books since 2008. They just haven't done anything with it, right? So, and I think that's also in terms of like the public markets and what's happening is like, it's really just a kick in the pants, right? Because if you think about it, this situation scenario has always been a possibility in China, right? And people just kind of forget that this is a possibility, right? So like if you know anything about how corporations are structured, and basically all the big Chinese tech companies that are listed in the US, like the Tencents, or not Tencent, like Alibabas and whatnot, they kind of bucketed, or it's done through like this very gray mechanism known as the VIE, which is the variable interest entity, and a WOFE, which is a full, like basically it's like holding companies within holding companies. So like,
it's like shell companies, basically.
Yeah, it's a shell game, right? And these structures are kind of like an illegal gray zone. The CCP tolerates it, right? But theoretically, at any time, you could pull the plug on these things. But everyone knows this, right? When Alibaba went IPO, this was like a big part of it. And people, honestly, for being honest, just kind of got greedy and they forgot, right? They forgot that this.
Well, that's why they're doing the cross listings now in Hong Kong, right?
Yeah. And now the CCP is just kind of like, hey, I mean, I don't think this is their intent. Their intent is, I agree with Zhang Gan. Their intent is like a bit of social engineering, creating society and the culture that they want. But I think this is like a useful reminder for whoever is investing in the market. Like, by the way, you should probably apply a discount to any Chinese company you're going to buy, because this could happen at any time, and you're not going to have a lot of heads up when it does, right?
Yeah. So I guess 2 points there. One is, a lot of these companies are also cross-listing in Hong Kong, and in that case, if you're buying the Hong Kong asset, you're theoretically buying a closer approximation of what the real company is. So I mean, that's what I prefer to do. Obviously, if you're an American investor, it may be a bit more expensive for you. But if I could just I think philosophically, to Jangan's earlier point, right? This discussion is like a several millennia old. Like I think the Latins had a term for it, like a like who will watch the Watchmen, right? Plato in the Republic was talking about this already, right? Like, if you have a monarch, if you have even a voted small group of people, how do you ensure that the decisions they make is representative of what is right for groups of people, right? The way Western countries have developed is by, and today, like whether you call it, Austrian school or neoliberal liberal economics or whatever, ultimately it's the idea that market forces will dictate the best outcomes given time to correct itself, right? And if you create the right kinds of checks and balances, markets will figure themselves out. The problem with that is, there's this very interesting perspective of like, when do you need generals and when do you need politicians in power, right? And this idea being like, in a fast growth wartime environment, you actually need strong generals who are able to kind of, ensure that people know what to do and that they are moving in a specific direction. And some country, I mean, China was able to take 600 million people out of poverty in the course of like 15, 20 years. Very few countries have been able to do that, right? And you can argue they did that at the cost of personal liberty, human rights. And now I can say this as an external spectator, that it seems like the right decision. But if I was living in a concentration camp, or someone in my family was, I would believe very strongly about this. So it's very nice to be like all Latin phrasey about this and be like, they're doing the right thing, right? But that being said, even as an external spectator, I feel like there's like some logic to this push, right? Which is like, if you go to the bare bones and you ask yourself, what is the best possibility a human being could express himself in life? And ideally, they should be pushing something scientific, advancing humanity, having some utility. Or if you're a believer in beauty and truth and art, then they are also creating something beautiful, right? Now, then the question is, what do you define as beauty and art? And is gaming and people spending time, 48 hours consecutively in Fortnite considered beauty and art? And if that should be something that you continue to support, is fashion art? Because if that's the case, then the growth of Alibaba, the growth of Tencent is things that are okay, right? So So I think that the CPC is making a strict argument here that like utility production industrialization is more important than opium, dopamine hits from cool fashion items or buying useless shit or spending time on a game. And if I was a parent, I might probably agree with them, but I don't know how I feel about that.
I mean,
Sorry,
there's one interesting point you bring up is like there is a huge disconnect of them telling their own story, and I think where China could make up is like developing in media and storytelling.
Yeah, she made a public speech a few months ago and basically telling everyone saying that you need to tell the China story in a different way because clearly what we have been doing is not working. So so basically, I mean, from my understanding, I mean, I sort of know how this bureaucracy works, right? I mean, if you look at their lingo, because they have a huge legacy, right? I mean, different leaders, different political thoughts were added to this narrative over the years, and then becomes something which is extremely difficult for outsiders to understand. I mean, if you think about any Chinese communist cadre, when he talks about something, he will always start with Karl Marx, then go to Mao Zedong, then go to Deng Xiaoping, then go. I mean, you have to mention about all these people and their thoughts before you mention about what you really want to talk about. So this has become a big burden, and it has become sort of something which is very difficult to communicate.
That's my point. I think from a media perspective, they developed the media industry. I mean, that's the power of American propaganda, right? All the cultural exports of movies and celebrities, all this. I think America has just equally the same problems. They just know how to sell the story better. So I mean, one way for China to solve this, if they want to share their perspective, is through media.
I think it's because we're English speakers who read English stuff, right? And at the end of the day, right now, whether you like it or not, we are in the midst of a Cold War where the West is painting a picture that the right way to live is Western liberal democracies and market forces. And close your eyes about Iraq and Afghanistan. We weren't there for oil, right?
Yeah,
but them doing the stuff in Spratly Islands, that's terrible. Look at China, somebody punish them. Unfortunately, it's all propaganda, right? And both sides have done all kinds of useless shit. If you look at anything that's happened in Nicaragua or Iran, really is the West doing things in a morally correct way, right?
Correct.
Was Guantanamo and what's happening in Xinjiang not neck to neck equal? Right.
Well,
let's get a final comment from Dave, and then we have to move to the next topic.
Sure.
Okay. So just sum this up. I agree with everyone's points here. I think ultimately, at the end of the day, it's a spectrum, right? It's a spectrum of beliefs and ideas, and there's trade-offs, as everyone has correctly pointed out on each side. And ultimately, my only point here is a question of where does your legitimacy come from, right? So in the U.S., where Western democracies, our legitimacy is derived from an election. It's a popularity contest. So, and that could be very thin. I mean, the recent elections, the margins were incredibly thin, and some of the candidates lost the popular vote. So the question of like, is that a legitimate leader is a question, right? And then on the Chinese side, I think a large part of where the CCP's legitimacy comes from is competence, right? And I think that's the deal that they've made is we will take everyone will drive the society forward, and our legitimacy is derived from our competence, right? And then there's no moral judgment here. My only point here is that works when you have a competent leader. But I think to Jungan's point, like what happens when that leader no longer becomes competent or becomes senile or whatever, and then you open it up to a lot of scenarios that we see where we live, where it's like single source of power, but the leaders and they've lost their competency, right? So that's I've said my piece. I'm done.
So in the 2x2 of democratically elected but not competent, and competent but not democratically elected, where would you choose to place your votes? Because on one side you have Trump, and on the other side you have Xi Jinping. I'm just laying that out there.
I mean, look,
the Singapore model too.
Yeah, this is the point, right? I mean, if you think about the function of a government is to provide a solution for the broadest group of the population and then optimize for whatever's on the margins, right? So if we use that heuristic or that framework, the CCP has been widely successful, right? So as long as I'm in that group, then of course I'm going to vote for the CCP. But as soon as I'm on the margins, then of course your tone changes.
Nobody votes
All
in
right,
China.
let's move on to.
Anyway.
Yeah, I can't go to China anymore.
They vote for people to go to the party, but beyond that, yeah, you don't vote. Okay, but anyway, last topic, BukuKas, BukuWarung. When Zhang Gang presented this topic, he said, "Is it tenable?" Andrew, you had these kind of companies and business models came across your radar very early. Why don't you explain kind of briefly what they are, how they work, and then maybe some of your early thoughts and how that kind of changed till now?
Got it. So just off the cuff, so Kata Book probably originated this idea in India, 2018, 2019. It's a model of, honestly, the way it's positioned is like bookkeeping for the lowest of SMEs, right? And whatever you call them, mitras in Indonesia, saris in Philippines. I forget what the term is in India, but like
Kirana
it's
shops.
basically your regular corner store. Kirana shops. There you go, Kirana. And like there's also one in LATAM, corner shop, that just sold to Uber for 3B. Slightly different business model, but like this whole corner store, like digitizing corner stores, has whetted the appetites of many people, and there's a lot of demand here, right? Like the Unilevers and Nestle's of the world want to get information of how stuff is being sold here. F&B players want to get into these stores. Flipkart's doing hyper local deliveries using corner stores, right? So if you're a corner store that only sells fast moving consumer goods, can you sell phones as well? If I give you, the details of what gets sold in a 10-kilometer radius around you, so that you take the inventory risk, but then you speed up the delivery time to customers from 7 days to 3 days, right? It's what China calls new retail, or what Alibaba and Jack Ma were thumping very strongly. And new retail is like a very messy term that is all of these things and more, right? But it basically means digitizing corner store / mom and pop shops. Now I think and so like for me, I think like the more exciting space is like the universe of these, not just the BukuKas and BukuWarungs, but there's Gudang Ada, there's Gudang Sari, there's Ula. There's been a lot of movement in this space of like, how do we get corner stores to just be more digitized, and therefore monetize it, either to sell ads, to sell that data to FMCG players, to I don't know, monetize it with loans. Basically, build cool shit, monetize it later, right? These apps, and there is some logic here, right? Which is more, like if you go even further back, like Facebook and Google built something so good that users were willing to just give all their data, that these companies were then able to monetize it and become behemoths and trillion-dollar companies, right? And so everyone's now trying to figure out what is the next moat of like data that people are looking at, and that's a huge consumer group, right? So that's probably the bigger picture here. Onto the specifics, like these two examples you mentioned, we're trying to cut it from a bookkeeping perspective, and the idea being like Xero / QuickBooks, but for small businesses, which is a pretty tough sell, because like if you're using pieces of paper in the past, would you actually want to use this? But where they really succeeded is in being able to build debt tracking as a feature, right? So in any of these markets, and if you've lived in a small village like me, you go to your local corner store, and because you have no money, you say, I want 2 candies and a Sampurna box of cigarettes. And then he writes it down in a little book. In Malaysia, we call it Buku 555, so your 555 book, because it's a little book that fits in your pocket and has 555 on it. And at the end of the month, your dad goes to the store and he goes, okay, how much did my family buy this month? Right? And, this guy says, okay, well, your wife bought this, your son bought this, your daughter keeps coming and buys, these chocolate chips. Maybe you should get her to lay off that stuff. And then he sums up that, adds a bit of interest on it, and you pay that, right? And now what these guys did, actually, Katabook looked around the whole space. They tried to build like QuickBooks. They realized it wasn't catching on. And then they figured out debt tracking was the thing that was going to blow things up, right? So when they built debt tracking as a feature, it absolutely blew up. Like basically, it was a way to digitize that loan collection process. And everyone absolutely loved it, because they were like, wait, well, now I don't need to chase this guy, because this dude just never pays back on time, right? And now I can actually have a record of when he paid me, and has he not paid for February yet? Because every time he comes, he's like, oh, I already paid you for February. So it was a way to digitize that process, which is incredible. And so they've had like incredible growth rates in Indonesia, and I applaud them, and whoever else is trying to build this kind of stuff.
Yeah. And I think, Dave, you're super bullish on these. Why don't you tell us your take?
Well, I mean, I think these things are, I mean, monsters. Honestly, they're monsters. Like if I look at sort of like their growth trajectory and the statistics, let me just start there and I'll go a bit deeper, right? So I mean, these guys are actually roughly the same size so far, right? And they've both been raising rounds of capital basically once every quarter, once every 6 months, right? So they raised their previous round before their most recent round. They had like 3.5 million merchants registered. And then they were processing somewhere in the neighborhood, according to their own reports, somewhere around like 500 million in terms of volume, right? So this was like February, November of last year, February of this year, respectively. And now, if I look at these numbers again, they're at like 6.3 million registered merchants, and then these guys are claiming they're processing like 20 billion US dollars worth of transaction volumes in like 4 to 6 months time. That's insane. Like that to me is incredibly impressive. So I mean, but those are like the surface level stats, right? I think why I really like these businesses is twofold, right? Number one, I really like businesses where there's a defensible moat, right? And going into like the Warons and acquiring these users and getting to sign up, that's hard work that a lot of people I don't think are willing to do. And that to me is very, very defensible, right? And the second part of that is also, I just think there's like a huge market demand. I did some like sort of like just high level research, right? And like in Indonesia, the Warons, these SMEs account for like 60% of the GDP. They're a huge contributor of the GDP, and they're like 90% of all employment or employers, right? They account for 90% employment. But their actual like percentage in terms of loans, like the amount of loans going to SMEs is only 20%. So essentially, you have this huge contributor of cap or to GDP, but they don't have access to capital. They don't have access to growth, right? And that to me is a huge underserved market. And I'm just, from what I've seen so far, I'm incredibly bullish on these two companies, or just the sector. I should say I'm incredibly bullish on the sector in general.
So I'm going to step back here and say it's not just about, if it's about loans, I think, it's a larger topic of like microfinance, right? Like, and Grameen Bank and a bunch of other places have been trying to do that. And it's not just about the Warungs, it's everyone who is loanable. How could you do better credit scoring and give them loans, right? Because the fundamental issue is a lot of these guys are what these countries call unbankable. They don't have bank accounts, they don't have data, they don't have credit scores, and because of their way of living, you're just not able to get that. And now I guess like the big push is like, how do you get other forms of data to make them more lendable?
Exactly.
Right?
Yeah. Yeah, well, that's exactly the point, right? Sorry, Jing. Let me just, that's the point.
No, go ahead.
Previously, you're right. It's an issue of data. You didn't have access to the data. Maybe their books weren't properly done, or they had bad invoicing or bad tracking, right? But that's, I think, what's the beauty of this platform is now that they're the infrastructure that powers the financial stack for these companies or these businesses, they have the visibility into that information, right? And theoretically, you are then optimized to be in a position where you can, be the person who makes these loans.
Yeah.
So sorry, Janggan, you're going to say something. Yeah.
Let's hear from Janggan. So Janggan actually built and sold a fintech company in Indonesia. So I think his insights are going to be really good on this.
Yeah, I spent enough time in Jakarta before the pandemic. Anyway, so a few points from me. First is that I think digitizing this sort of last distribution points, which first, I mean, are numerous, and second is that they reached out to tens of millions, if not hundreds of millions of consumers. And if you can control that entry point, there are lots of things you can do. This is the stuff that, I mean, if you think about some of the state-owned banks, they have been trying to do that for a while. I mean, building edge networks across the rural areas, villages and stuff. And if you look at companies like Kudo and Payfast, they were doing the same thing. And they have Bukalapak building Mitra Bukalapak and Tokopedia building Mitra Tokopedia. So basically, there's all these companies, and even Warung Pintar. So there's all these companies which did something similar, which experimented different models, but which went, I think, a bit too early in the sense that the market was not ready, the consumer education was not there, and I mean the internet coverage outside major cities, etc. So all these infrastructure problems. So as a result, these companies which went earlier were not growing as fast as people look at the potential. Then you have BukuKas and BukuWarung taking the kata book model. They go into Indonesia and they use a model which is relatively light and which is relatively easy for companies to adopt. And by now, I think the likes of Xiaomi, OVO, whatever, have made sure that everyone has a smartphone or everyone has the ability to buy a smartphone on credit. So so when they came in, they rode a wave, and they can generate. I mean, they can generate a user base very quickly. Um, the question is that I mean, what's next, right? I mean, once you have this user base, how do they convert this into something which has a mode and which is monetizable, whether it's through loans, whether it's through fees, whether it's through commission, whether it's just sell game credits, whatever. So this is the thing they need to figure out. I think I think microfinance is a big thing that they have been telling investors. So that's something which I think also depends a lot on the regulations as well. So I see that BukuKas hired the ex-Grab guy ahead of government relations in Indonesia. So I think that's the move on the right side. So make sure that, because at the end of the day, you have all this data, and would only all this data pose a problem that the regulators are not comfortable with. So this is something that these guys probably need to figure out. But I do think they have the ability to figure this out. I mean, if I would Grab bought Kudo, and if I would grab a Gojek and I would invest in one of these companies, I would not buy it because I don't have executives to run it, but or to run it efficiently. But I would invest in these companies because just in case they become super big, and at least I have a hand in it.
Agreed.
Yeah. So man, just quick comments there, right? I mean, good that you brought up like Bukalapak had their incredible IPO today, 24% up on their stock price immediately upon launch, and they chose to launch in Indonesia, right? Like, so I mean, to me, fucking awesome that we have like a local Indonesian startup just completely killing it, and they kind of innovated on this Mitra model first, right? They were the first in the market to launch this. That being said, and so like actually one thing I like about Bukalapak is it's not just an e-commerce company, it's actually way more than that, but people don't see a lot of that details unless you're in Indonesia. And they actively like, so one of my personal beliefs is like you've got to be very close to the ground and be able to work and figure out what's right for the warungs, because I think the problem is us sitting in our nice seats here far away from the ground. The numbers look nice, the story looks nice, but the detail is very different. Okay, so let me just spell things out a little bit. So Kudo started by one of my colleagues at BCG, Agong. They sold incredible business, and it was probably a precursor to the Pinduoduo model. It was an agent-based selling model, right? They were like, can we get people inside all of these tier 3, tier 4 cities to actually sell on behalf of Shopee, Lazada, these other guys? Because a lot of people don't know how to use these phones. It was an incredible model when you thought about it. It was almost an extension of affiliate marketing, right? So like what we already do online, can you do that physically? And today, if you think about it, that's the Pinduoduo model. How can I get people in apartment buildings to buy for a group of 50 people and get discounts and get paid for doing that, right? And almost build like a whole career out of it. And if you think about what Flipkart is doing with the hyperlocal P2P stuff in India, it's or what Gorillas is doing in Berlin with dark stores, except that they own the stores. It's almost a similar model. How do we get things to people faster and monetize corner stores, right? And so I guess the cool thing here is like this space is massive, right? Like there's multiple business models that are going to exist. And that's why everyone's investing in all the cuts. Like Ula's raising around, Gudangada's raising around, Temasek's going in left, right, and center, Sequoia's in everyone, right? And I think like the space, like we're only seeing the beginnings of it. Like you're not even cutting into the small holders in other industries. Like what about agri? What about fisheries, which are much larger in Malaysia and Indonesia? What about manufacturing, which is massive in Thailand and Vietnam? How will we digitize the small and medium supply chain players in this space, right? But I think, and this is where I'm going to take a step back, I think the interesting thing here is like, what are the roads and railroads that are being built right now? Because a lot of these guys, ultimately, they want to build these apps so that they can monetize the users later. But sometimes there's a whole layer underneath that needs to be built first. And like some apps have been able to build that for or in lieu of governments. No offense to any governments in Asia, but like sometimes if the government ain't able to build it, the company does that, right? So If you take India, India built this incredible India stack, right? They've got UPI, the payments infrastructure. They've got Aadhaar that does like verified credentials. And now if you think about it, like that's what a lot of these businesses in Indonesia are trying to do as well. In lieu of the government doing it, they're trying to do it, right? But you're still going to have a ton of issues because if you look at these businesses, the people that we talk about unbankability as if it's a spectrum, but the reality is like it's very, very difficult to do proper credit models and figure out who actually can you lend to, right? But and this is why microfinance has struggled because, like, you know, with grants in like East Africa, for example, you have requirements like, can you give grants only to people who send their daughters to school because, you know, you have better outcomes? Can you give grants to people who only so the Bill and Melinda Gates Foundation found that giving like trying to get girls to go to school is the best thing you can do because it reduces population growth rates. It has an educated population. You know, they just, it's better for the economy. But there's no way to actually add that as a condition because how do you actually calculate that? So here's an idea for you. What if you could use, you know, some kind of distributed ledger to track attendance records of your children for you to get micropayments, right? So like that's what I mean. Like that innovation around this space is yet to be broken yet. And you know, just to call out like a crazy example, Temasek's invested in this company called Affinity. Affinity is trying to do distributed contracts to solve issues like this. Right now, they've launched a program called Good Worker in India that is basically like a P2B contract employment service, right? And so actually I think like if you go one level deeper than these business models we spoke about, there's actually like credentials and financial stacks of services that haven't been built yet, and that's where a lot of cool opportunities are.
Okay, I think we're gonna have to continue the conversation for next week. Jangan has to run, but I think it's a good place to end that.
Lots of good points, and I think many of the issues here that we could expand, and they're all interrelated. So very, very interesting.
Yeah. All right, guys. Thanks for a second episode of the LD podcast.
Always a pleasure, guys.
Thank you. Have a nice weekend.
Thanks, guys.
See you guys.
Ciao, guys.
Bye.
Hasta luego.
Hasta luego.
Yeah, sorry, Jangan had to go, so we had to
Hey, no worries, man. I just realized it was 4:30.
Yeah.
Yeah. You need like a timer, or maybe like a clock or something.
Yeah.
You're the clock, dude.
You're the clock.
We did grab
I need a
for an
signal.
hour, which sucks.
No, it was 40 minutes ago.